This is Catherine Morgan-Nance. Welcome back to talk about the fun stuff. Cash, that is. In part 5 of our video series, we will prepare a cash budget, which draws information from most of the budgets we prepared earlier. Please refer to your notes from previous videos so you can follow along with how the numbers in this video originate. The cash budget is my favorite budget because it informs management whether it will have enough cash to operate each period. That is an extremely important piece of information. If the company's line of credit is too small, management may be forced to curtail purchasing equipment, buying materials, or otherwise expanding. That's bad news. The cash budget is just as important as the budgeted financial statements when discussing future plans with the company's lenders and investors. The preparation of the cash budget can be quite complex. This budget should be broken down into time periods that are as short as feasible. It consists of 4 major sections. The cash receipts section lists all cash inflows excluding cash received from financing. The cash disbursements section consists of all cash payments excluding repayments of principal and interest. The cash excess or deficiencies section determines if the company will need to borrow money or if it will be able to repay funds previously borrowed. And the financing section, the last section, details the borrowings and repayments projected to take place during the budget period, including any interest to be paid on loans. When preparing the cash budget, Royal's management again must make a number of assumptions, and one of the most important assumptions is what the minimum cash balance will be. Nobody wants to run out of cash because they had to pay an unexpected bill, right? Just keep that in mind. Additional information comes from the capital budget, which is about equipment purchases, and the shareholder plan, which details out dividends and stock issuances, etc. It would be a good idea, in this case, to refer back to this screen, jot down the information, or just print it. We will need all of this information to prepare the cash budget for Royal. The first step in preparing the cash budget is to calculate the total cash available. We began April with $40,000 in cash. To this amount, we add our expected cash collections from sales of $170,000 for the month of April, and that came from the schedule of expected cash collections. We complete the first section by calculating the total cash available of $210,000. The second step is to calculate the total cash disbursements. During April, we expect to pay $40,000 for raw materials, $15,000 for direct labor, $56,000 for cash manufacturing overhead, and $70,000 for cash selling and administrative expense. These last two amounts are not the total manufacturing overheads or the total S&A expenses because we have excluded non-cash depreciation costs. Remember that? Please refer back to your notes from the prior videos to verify those amounts. According to our facts, during April, the Board of Directors paid a cash dividend of $49,000. Total cash disbursements for April total $230,000, and we have now completed the second major section of the cash budget. The third step is to calculate the excess, or the deficiency in this case, of cash available over disbursements. In the month of April, we expect to have a cash deficiency of $20,000. Note that Royal has a policy that the company will always maintain an ending cash balance of $30,000. We arrive at April's deficiency amount by subtracting total disbursements of $230,000 from the cash available of $210,000. The fourth step is to determine the financing requirements and the ending cash balance. After Royal borrows $50,000 on its line of credit, it will have an ending cash balance of $30,000. Notice when we look at the next slide that the ending cash balance for April becomes the beginning cash balance for May. And now let's complete the cash budget for the month of May. The 4 steps we just completed are repeated for the month of May. The result is a $30,000 excess of cash available over disbursements, Since Royal must maintain a minimum cash balance of $30,000, it will not repay any of its loan in May. The same four steps are repeated for June. The result is an excess of cash available, this time of $95,000. At the end of June, Royal will have sufficient cash to repay the $50,000 borrowed in April plus interest on the loan. Good deal. The total interest is $2,000 as demonstrated in the computation of interest box on the left side of your screen. It's equal to 50,000 times 15% times 3 months out of 12 months. Royal will end the quarter with $43,000 of cash on hand, and this cash balance will appear on our budgeted balance sheet. We are now ready to move from the preparation of the individual budgets to preparing our budgeted financial statements. The cash budget was prepared first so that the interest expense can be determined for the budgeted income statement. We'll begin with the budgeted income statement in our next video. See you soon.